Cheers.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Eddie in Boca Raton. Hey, Eddie, what's going on?
Hey, Tom, how are you, man?
I'm doing great, man. Yourself?
Good. It is a treasure to have TFNN every hour during the trading day, to be there to help you, to guide you, and even to give you some peace of mind, or like that somebody else is there with you while you're trading this crazy market, either up or down.
Well, listen, we appreciate you growling and prowling us out here, because we wouldn't be out here, folks, if we didn't have all you guys, gals, tigers and tigresses as clients. And, you know, the market teaches you every single day, man.
Now, Tom O'Brien.
Good afternoon, everybody. I'm Tommy O'Brien, coming to you live from TFNN. Thanks so much for kicking off your afternoon right here. 3 p.m. Eastern Time. We got one final hour, and we got a great hour coming up. We got our man Basil Chapman at 3:15. We're talking to our man Tim Ord at 3:30. And don't forget, folks, you still time to get in there. Basil's webinar, we'll talk about it at 3:15, right on the front page for opening call subscribers. You can always add some Tiger dollars to add some savings to that as well. So we pick it up with a little bit of a choppy market on a Jobs Tuesday. We get 2 months of jobs data this morning. The unemployment rate goes up. Wage data up 3.5% year over year. That's one of the lowest numbers we've seen going years back. And we have markets right now. Can't quite figure out which way we want to go. We were down to as low as 68.20 on almost two occasions. And even in the last 45 minutes or so, this market's up 30 points in the S&Ps from where we were. You check it out on a daily basis, talking about the volume. And yeah, we're doing some volume today. Today, already as much volume as we did yesterday. And you're probably going to come into, depending on the final hour. But the final hour is always a good one. We'll get volume on the close. So we have some selling today with volume. NASDAQ 100, as I speak, we get into the green. Look at the volume on a daily on the NASDAQ. We've already done almost 600,000 contracts. Yesterday, you did 500,000. Dow, similar action. We got volume across the board today. It's a Jobs Tuesday. We should get some volume. You get some action, you kick it off, and you get the Russell off by 0.7% right now. You check out the heat map, okay? And we get the Dow down 347 points. Well, yeah, you got Goldman off a full percentage point. That's a $900 stock. Okay. UNH down 2.7%, $331 stock. Now, what's remarkable is healthcare, one of the greatest areas of the jobs in terms of this morning. And I'm going to pull up later in the program in terms of the huge developments about, it's happening right here in Florida in terms of the build out of healthcare. And yeah, healthcare jobs, 46,000 jobs in November, okay? November payrolls were 64,000 for the month. Of that 64,000, 46,000 came from healthcare, which is more than 70% of the net increase. Timely as Obamacare, the subsidies, all of that getting a lot of attention, of course. And yeah, healthcare jobs pushing this market higher. When you look at the headline numbers, though, in terms of where we were in jobs, we had 64,000 in November. You had 105,000 in October decrease. Now, that October decrease of 105,000, 157,000 plunge in government payrolls, which was a deferred impact of some of the options to the federal workers for them to take their cuts and get out of that job. So that, hitting that. Eight of 13 categories posted increases. Motor vehicles, though, down almost 2%. One of the parts there that's hitting it is that electric vehicles alone doesn't take a lot to bring the whole thing down 1.6%. When you think about the EV sector alone, lost $7,500 credits in there. And on the wage front, as I mentioned, wages up 3.5%. But that's what it looks like on the chart. You go back to May, weakness across the board, right? May, 19,000. Then we drop 13,000 in June. You add 72 in July. We lose 26 in August. You add 105 September. You lose 108 in October. And then we add 64 in November. And of that 64, you add a lot of healthcare jobs in there. Now, the one thing, the market seems weak. 3-month average, 22,000 jobs. 3-month average, 22,000 jobs. We keep that up, the unemployment rate is going up. The unemployment rate right now is 4.6%. Okay? Now we check out yields. Couldn't quite figure out which way they wanted to go, but now we are a little bit higher by about 5 ticks from where we were at 8:30 this morning. You see the initial spike to higher price, lower yield. And the logic there is, listen, if wages are only going up 3.5%, the lowest number that we've seen in years, and we have an economy that's adding only 20,000 jobs a month, the Fed is going to be worried about the full employment side of the mandate. Okay, now that's your 10-year. You jump over to the 2-year, which is much more Fed dependent, and yeah, we're pushing the highs. 104.13. Now you're only 2 ticks higher from where we were at 104.11 this morning. But nonetheless, you are higher price, lower yield. And yeah, we've been talking about it. The dollar remains under pressure. 98.11. We accelerate to 97.86 this morning. You jump over. Gold catches a bid on that acceleration to a weaker dollar this morning. And we check out the volume on gold. And same deal as some of the equities. Gold, already as much volume as we did yesterday. And we were really close to all-time highs this morning. We hit 43.67, so about $31 away from all-time highs. We're trading at 43.42, and you jump over to silver on a volume basis for silver. Yeah, that was quite a sell-off on Friday with volume. You bounce on lighter volume, and nothing too remarkable today for silver. You jump over the VIX right now, volatility index. As we're approaching the NASDAQ in positive territory, the VIX approaching the lows of the session at 1646 right now. All right, we jump around to some of the market leaders out there. Apple up by 0.1%, quite a sell-off yesterday. Got to talk about Tesla. How about it, man? Tesla up by 2.3% right now. And yeah, you're within almost $2 of all-time highs. We hit a high of 487.25 this morning, so about $1.25 away from all-time highs. Tesla, quite a run when you think about it, right? Where was the buy? Where was the buy on Tesla? Well, you could have bought it down here, but you know where the buy was, folks? You had this consolidation down here. You came back. You tested that consolidation on the day he had a spat with the president. I mean, think about it. Now, almost tongue-in-cheek, right? But boy, the low of that day, we haven't seen it. Well, maybe we'll never see it again. As Tesla's trading at 486 right now. And you're going to have some volume. Okay, on a daily basis, yesterday you did 115 million. Not sure we'll get there today, though. 82 million shares currently on Tesla. On a weekly basis, though, you know, it's only Tuesday, folks, on Tesla, and you've already traded almost 200 million shares, and you did 350 last week. Imagine that. You could break the weekly totals by tomorrow. Now, you're bumping up against, really, you'd like to see a number around 500 million on a weekly basis. Tesla, trading higher. Uber shares, trading lower. All right, folks, we're coming back with our man Basil Chapman. Stay tuned.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits. The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks, and it's Tuesday, 3:15 p.m. Eastern Time. We got 45 minutes to go until the closing bell, and today's a special day, folks. Basil Chapman, opening call subscribers, a 90-minute live webinar. It's happening tonight, 4 o'clock. You still got plenty of time to sign up. We're going to talk to Basil about it right now, folks. You can head on over to the front page at TFNN.com. You'll see the opening call right there on the front page. You click on that button. You sign up. Now, you always get a 30-day money-back guarantee, folks, whether you sign up for the monthly, the 6-month, a year. Even if you can't attend the full 90 minutes for Basil tonight, the webinar will be archived, okay? And if you're in our Tigers Den, it's as simple as you'll then gain access to that room. And if you're not in the den yet, folks, you can still sign up. And you get instructions when you sign up, how to enter that room, plenty of time. So please check it out on the front page, and we're going to talk about some of that right now with our man Basil. Basil Chapman, good afternoon.
Hi, Tommy. How are you?
I'm doing well. How about yourself?
I'm very good, thank you. Looking forward to this 4 o'clock webinar. It's going to be, I always try my very best to look ahead and try to time these webinars according to the cross currents of the market. And I think we're right now in a cross current, a little digestive phase after a fabulous move. And I thought it was appropriate. And we've already been discussing for a little while the outlook for 2026 and what looks good into the new year. And based on my monthly chart and with the Chapman wave methodology, there's a real good chance that we'll have higher highs coming into 2026, even if we have pullbacks. That's very important. And what I'll be doing is I'll be going through some of the because this is a webinar for people who are trying the newsletter out for the first time. We're just wanting to know what the methodology is about. On the first part of it, I'll go through some of the techniques, the Chapman wave methodology. But then we're going to be looking at different indexes, different stocks, and if anyone doesn't think that there's a cross current going on right now, they have to look at stocks like a General Motors, like an Alcoa. These are cyclical, deep cyclical. When they start to move, usually, not always, but usually they're starting to tell us that there's something in the economy that's really starting to work. So I think that this is a very important moment. So we are along those stocks, but we're looking to add. We built up some cash position. We're trying to put that to work. I like to have stocks that are in single digits, double digits, triple digits, or anything that looks really good. Doesn't matter about the price. I have a nice mix in what I call the portfolio. This is a very interesting time because some of those real big winners some of them have had 50% declines just in a month. So fund managers are looking to put money to work in other areas, and that's what we'll be looking at right now. We've already articulated and looked at certain ETFs, certain stocks that look like they are moving into 2026 very nicely. Some of them might be taking a bit of a digestive phase. So that's what I'll be discussing, and I will be demonstrating the technique as we look at each of the charts. So it's quite exciting because not always do I get a chance for my subscribers to actually take time just to show the technicals. This will be an opportunity to go through it. And it's fascinating because as I was reviewing it and modifying it for myself, that's the webinar, the fixed part of the webinar, it's always fascinating. You forget some things and it's, I haven't even looked at that for a while. So this is great for me as well. I'm really looking forward to it, and I think it's very timely in this pullback that we're seeing right now.
Well, Basil, you're a great educator, man. You always do such a phenomenal job in those webinars. I look forward to them myself. 90 minutes, folks, 90 minutes at 4 o'clock. And for those subscribers, Basil, that aren't familiar with your newsletter, so you have updates every morning, of course, but then we've talked about it before. So you got the webinar, of course, tonight, and there's many great archive webinars, folks, that you gain access to. So like tonight's webinar, that's going to be up there on your account members page. Okay, you can watch it as many times as you like, whenever you like. It'll be up there if you can't attend the 90 minutes or you just want to watch it again. And but then you also put out weekly videos, Basil, where you just kind of break down. I mean, they're almost an hour long sometimes. Those almost a webinar.
Actually,
and you do those either like Friday, Saturday. If you could just talk to the listeners about what you do, because it's an outstanding service. And of course, it all comes with the opening call, folks, including tonight. And what you do for subscribers, Basil, please.
So every morning between 8 and 8:30, sometimes a little earlier, I send out my newsletter, and it's a pretty detailed newsletter, but it underlines specifically what you might be looking at that day. So you don't have to read everything. I also give a daily update based on the Dow. I'll just show this chart right now. For instance, this was today. There are 3 views of the chart of the Dow. This is the daily. This is the daily with different technical indicators on it. This is the 120-minute chart, made a peak F top, and we're pulling back from that. And then I just write a paragraph of what we're looking at. Is it really applicable to the S&P and the others because it's a market overview. And what to look for usually at 1:30 if the market, in this case, says today if the Dow is minus 40 or more at 10:30 and holds negative through 1:30, expect another weak close. Remember, the generals need the troops to follow right behind. So a plus 60s or more between 12:30 and 1:45 will likely give a plus close. So I make it very clear what we're looking at, and then I give a very, as I say, I update the charts every day, whatever we are looking at. I give buy signals. I give an entry point. I give the price. I give the stop, always give the stop. And we follow it along whatever stocks we have, quite a great deal of stocks that we are long right now. Some we've had for a very long time. And if you get in, because I've had subscribers for so long, I've got people that are still long from the low of 2020 in the Dow and the low, 2020, the 2022, and this April low. So it's additive. So when you get on, the sooner you get on, the sooner you can get into a position and hopefully hold it for quite a while. So I really like, it's a long term and short. Some trades could be 30 minutes and some trades could be 30 months. We had the dollar for 2018 until the beginning of this year, because once I realized that the last time Trump was in office, he was talking about a lower dollar. And I started to see the dollar come down. I said, okay, we want to get out of that dollar long position. And we had a very nice profit. We took it out, and that was a number of years. So it could be short-term, long-term, intermediate term, but we are already setting up now for 2026. That's the kind of portfolio I'm looking at. There are actually 1 or 2 sectors that have just come alive right now. We've been waiting for a long time for them to start up. And I think they might give a nice entry point so that if they rally through January, that'll be fabulous.
Well, Basil, I look forward to it myself, man. I'll be in there at 4 o'clock, right when I wrap up this program. Folks, check it out on the front page of TFNN.com right now. The opening call, and it comes with a 30-day money-back guarantee. Always a great 90 minutes of education. Basil, I appreciate it, man, and look forward to seeing you at 4 o'clock.
Thank you very much, Tommy. I'll see you very soon.
Okay, thanks. Check it out, folks, the front page, TFNN. And remember, you can add Tiger Dollars. You still get a 30-day money-back guarantee. And those Tiger Dollars, when you apply them to the newsletter, but Basil, always a great educator, 60 minutes, not enough time. Folks, Basil, he needs more than 60 minutes. A great 90-minute long webinar live tonight. And again, that will be archived if you can't attend all that live. All right, and with that, we get the markets continuing to chop higher. We get the S&Ps right now, negative by just 21 points. Yeah, we haven't been here since about 11 a.m. this morning. NASDAQ, we're up by 30 points right now, or 0.1%. All right, folks, stay tuned. We're coming back with Tim Ward. We'll talk some markets. We'll talk some ratios. Always a good segment. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We got the markets drifting higher right now. You got the NASDAQ 100 coming right back up to those 10 a.m. highs. We're up by 0.2% now in the NASDAQ, and you got the S&Ps right now down just 0.25%, and we're good 43 points from where we were trading at about a couple hours ago. All right, right now, folks, as we do each and every Tuesday and Thursday at 30 past the hour, we talk to Tim Ord. You can reach Tim at his website, ord-oracle.com. You see Tim right there. And over at TFNN.com, under the Services tab, the secret science of market tops, how to identify market tops, and 6 secret ratios every trader should know. And we talk about some of those ratios here, as I say, when we talk to Tim. Tim Ord, good afternoon.
Good afternoon. So I'm bullish here. I don't think anything's starting to the downside. If you pay attention to the ticks and trend earlier today, probably an hour and a half ago, the trend was around 1.4 and ticks were like 300, 400 down. And that was showing panic. And yesterday we had a trick. This is not on my charts, but yesterday we did have a trend close of 1.26. Day before we had a 2-and-1 downtick reading. That's a bullish combination, what I call it. And that suggests the low will form as early as the day of the readings, which would be yesterday to as late as 2 days later, which would be tomorrow. So we got panics in the ticks and trend. But the first chart I want to show you, this is a weekly. The bottom window is the SPX fixed ratio weekly. The next week, or the next higher window is weekly SPX. And if you look at way over to the right, actually get my drawing tool here. If you look over here, we actually have not touched a new high yet on the SPY. But if you go down to the bottom window there over in the right-hand corner, the SPX VIX ratio made a higher high. Kind of a similar thing happened back in, this is a weekly chart, but back in 2022, the SPX VIX ratio is making basically higher highs, that the SPX is making lower highs. That was predicting at some point the S&Ps are going to make higher highs. And that's exactly what happened. We have the same kind of a setup here. What I'm saying is the SPX VIX ratio leads the SPX or SPY. So, but this is on a weekly chart, so that's kind of a little bit bigger time frame. We can get down to a little bit smaller time frame here. You can see this is a daily SPY. Next one, higher window is the SPX VIX ratio. You can kind of see it there. You can see the SPX not hitting a new high, where the ratio is obviously hitting a new high. So even though we pulled back here, I think it's just a minor pullback. What I want to point out here, we did have a big, this decline right there was kind of a selling climax. The weeklies don't really show it, but anyhow, after selling climax, you got to have a sign of strength, and there's different ways of sign of strength. You can have an advanced decline sign of strength. You can have a volume sign of strength, and there's probably even another one, but those are kind of the main two. And what I want to point out, we did this kind of a Zwag breast thrust indicator type thing, and Zwag depends what your interpretation is. Some say they did get a Zwag breast thrust indicator triggered off of the was that November low or October low, and I'm thinking there's some evidence that probably did happen. This one's a little bit different. This is a 5-day average of the advanced decline, and it has to get below 0.7, and it has to rally to 3.0 within 10 days, which is basically 2 weeks. And to get down to below 0.7 on advanced decline, that's kind of showing a lot of panic. And panic's really good. Kind of helps you define what the market's doing, because once you get panic, you have to have a sign of strength after that panic. If you don't get panic, you're going to get more signs of weakness, and you'll continue to get signs of weakness until there's a sign of strength. And what I want to point out, there's a sign, this is off the April low. We did have a sign of weakness or a panic bottom. Then right after it, it was a huge sign of strength. The advanced decline went way up to 0.45. Needs to only get to 0.03. But that was a major sign of strength off that bottom. We have it here, too. We have a sign of sign of weakness, then it has to turn around and get a sign of strength. We've got those parameters coming off the last low. So this is more or less a confirmation that this rally is not done yet. We haven't even hit above the previous highs yet. But according to the sign of weakness to sign of strength, this rally has further to go. And so we're going to break to new highs. I thought we might be breaking them quicker because we're into a seasonality bullish period right now. We call it the Christmas rally. It's supposed to start around December 14th, but it can be a little early, a little late. Maybe it's going to start today, but I bet it starts this week. And usually it lasts into, I think, January 4th or something. We're in a bullish sign of strength or a seasonality period. We do have a sign of weakness to a sign of strength, which is bullish, and we got a positive VIX, SPY or SPX VIX ratio thing. So there's quite a bit of bullish stuff going around here, and we're kind of just screwing around. So I'm bullish. I'm looking for new highs. Is this year going to be next year going to be good as this year? I'm not sure. This is midterms coming up, but on a short-term basis, over the next minimum 30 days, maybe 90 days, if we get lucky, the market probably will be favorable here. So we'll see how the cards play.
And it was quite an acceleration. I was just looking at the S&Ps, of course, when you were talking about that real sign of strength there. And I was just even playing with the numbers, Tim, and it's, the S&Ps and, of course, NASDAQ growth stocks, but even S&Ps, it was like up 6% in a little over maybe like a couple weeks or something like that. Quite the acceleration, right? Man, that's a lot of strength coming into December, and nothing kind of getting in the way of it just yet.
Yep.
What'd you think about Friday and any selling? The longer term, I agree, man. Did that catch you at all? We had a little bit of selling on Friday. I know you're bullish, but I was watching some of it, right?
We touched new highs and higher volume when you got this pullback over the last couple of days here, or 3 days. And that kind of surprised me, because normally when you start attacking previous highs and higher volume, the market never makes a top in high volume. It always gets tested at a minimum. And so that kind of surprised on this little pullback. But I don't think it's anything to worry about from the stuff I'm looking at. I mean, the VIX, we got panic. I was hoping we get panic on the pullback, and we did. Because if you don't get panic on the pullback, you're going to go down until you do get it. So, So we're getting it now.
I was just going to say, I mentioned Friday, but, one of the few red days in the market. So since November 21st, which is almost a full month, there's 3 or 4 other red bars on there, but really the only substantial one is the market's pushed higher.
Yep.
All right, folks, stay tuned. We're coming back with Tim Ward, and I think we're going to talk some gold. We'll talk some metals. Stay tuned. We're coming back. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky.
Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks, and we got markets continuing to push a little bit higher right now. We are at session highs in the NASDAQ, up by 0.3%. You got the S&Ps negative by just 12 points, and yeah, you're up almost a 50-point run since about 1 o'clock. We're talking to Tim Ord. Don't forget, folks, you can reach Tim at his website, ord-oracle.com. There it is right there, and he's got a couple of great webinars under the services tab at tfnn.com. Check those out as well. All right, Tim, I see that next chart up there, and we're jumping into gold. Is that correct?
Yeah, it's just, I don't want to bore people with this chart, but you have to look at the bigger trend. And this is a trend going back to 1982. And I think there's a 12-year cycle going on. I don't have enough data points to really prove that point, but it seems to work up pretty well. And what it is the monthly XEU. I talk about this, I think, over the last month now, and people probably getting tired of me talking about it. But this kind of identifies what the bigger trend's going to do. And it's XAU to NDX, in other words, gold stocks compared to the NASDAQ stocks on a monthly time frame, and I take the RSI. And when the RSI, in other words, when this ratio rallies really strongly, the RSI goes up with it. And before, the previous rallies got up around 50 and just turned back down. This one got up to 70. And that's initiation of an uptrend. And it's changed of character, they call it. But anyhow, once it gets above 50, in general, it'll stay above 50 for a long period of time. Previous cycles lasted 12 years. Well, this one lasts 12 years, and I think there's quite a bit of evidence to suggest that. But anyhow, what that says is gold stocks are going to outperform the NASDAQ stocks over the next 12 years. It's boiling it down. That's what's supposed to happen. We'll have to wait and see if that actually happens. But you really don't want to shy away from the strength of these gold stocks reaching RSI compared to the NASDAQ stocks. So NASDAQ may go up, but gold stocks comparably will go up a lot faster, or a higher percentage, I guess you might say. So until that thing changes, in other words, if RSI drops for some reason down below 40 or even hits 30, that would suggest that scenario of gold stocks outperforming NASDAQs going forward would not be true anymore, because now gold stocks are a lot weaker than NASDAQ stocks. So that would blow that theory out of water. So in general, this RSI going forward in the coming weeks and years has to stay above 50 or in that vicinity. 50 is 49 close enough? Yeah. Is 39 close enough? I think that would be a sign of the gold stock rally ending. So anyhow, that's what I want to talk about that. So that's what it keeps in mind. So you'll have consolidations along the way, and I think we might be getting close to one now. This is Pring's inflation-deflation ratio. It gets up RSI up around 60, which it did here on this last run up. But, you can still rally a little more. There went up, probably another couple of months. There, it looks like it rallied a little bit longer there. Had a couple of months, maybe a month or two there. So I'm thinking we're going into some sort of a high, and we're starting and we did get a correction. Now we're back to the old highs. So I'm thinking we're starting to. It's not a topping process. It's a process where we're going into some sort of a consolidation. And I'm thinking we're heading into it. And here's, on a short-term basis, this is a momentum indicator. The bottom window is the daily cumulative advanced decline. This is a daily, so we're going down from a monthly chart. I think the last chart was probably a monthly chart too. Now this is down to a daily chart. So it picks out the minor swings and advances. Last time this thing gave a buy signal was back in February this year, and it so far is still on a buy signal. But what this is the daily cumulative advanced decline. And as long as that indicator stays above the mid-Bollinger Band, the uptrend's intact. The next higher window is the up-down volume, kind of same thing. As long as the indicator stays above the mid-Bollinger Band, the uptrend's intact. That would suggest NDX or GDX is in an uptrend. And so far, that's what's happening here. We're kind of going flipping sideways here. We did hit a new high in GDX. And so we're kind of, have we closed below the mid-Bollinger Band? No, we haven't. I'm thinking that we could still push a little bit higher, I think. That's what I'm kind of waiting for and actually hoping for. But if both those indicators do close below the mid-Bollinger Band, I'll be out of my GDX position, maybe for a month or two. I don't know. But it could be a consolidation. So that's what I'm thinking we're heading into. But, we could go up to 90, maybe 95 before those two indicators roll over. So I don't know, maybe it's rolling over right now, but as we're talking, they haven't. So I'm kind of staying with that long GDX for right now. And so I'm kind of being patient. And so when gold stocks are going up, you're talking about inflation and stuff. And here's one indicator, or here's one, this is it's an ETF. For some reason that fell off. Let me get my drawing tool here again. All right, there it is. This is the commodity index. So you're talking about lumber, you're talking about the precious metals, you're talking about pork bellies, you're talking about corn, wheat, all the commodities. And what I want to point out is inflation is going to be probably really bad going forward here. But this is a William O'Neill's cup and handle pattern. There's a cup. It's kind of hard to read. The handle is this thing going sideways here. And the narrower that handle is, the more powerful that move becomes. So if this thing got all the way down to 61.8% retracement, which would be around $15 on this thing, that would be not as strong. It is pretty much has stayed at 38.2% retracement and higher. And it's got really a tight range in here. It's kind of hard to see it. But the market is actually starting to hit higher highs on higher volume. You can see it down there, and it's real narrow trading range. What that is doing is like pressing a spring down. At some point, it's going to spring up, and it's going to be just a rocket out of here. And when does it start? I'm along this thing. I'm at, I don't know, 23 and a half. I think it's 22 and a half right now, so down about a point. But at some point, this volume is going to keep increasing, and you're going to start breaking out to the upside. And the path from here probably to these old highs back here are probably going to be fairly short. In my opinion, I think you could reach that next year. This is a monthly chart. So this chart goes back to 2009. So are they going to be as good as a gold stock? Maybe. My point is that kind of reinforces the gold stocks and the gold going forward, because if these commodity prices break out to the upside, which is inflationary, that's going to fuel probably gold price along with it. And in general, if gold goes up, gold stocks are probably going to go up with them. So anyhow, what I'm saying here, this kind of reinforces the gold run going forward. So,
and on top of that, the dollar. I mean, we hit the lowest level in the dollar. We're back above that we had hit since like the beginning of October. So 10 weeks, and we're at 98.14. So that kind of lines up with that same deal, right? The dollar weakness, commodities trading higher. We got crude at $55. Steve, Tim, great stuff as always, man. I appreciate it. We look forward to talking to you on Thursday.
All right. Thank you.
Thanks so much. Folks, check them out, ord-oracle.com, and those great webinars under the services tab. We're coming back for one more segment.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. And yeah, checking out that dollar. Great stuff from Tim Ward as always. Check out his website and those great webinars. And don't forget, folks, tonight, Basil Chapman. Okay, coming up at 4 o'clock. You still have time, folks. Check it out. The opening call subscriber webinar. If you can't make it in there for the 90 minutes, it's going to be archived. And the Tiger Dollar Holiday Sale. Now, folks, if you've never got Tiger Dollars, okay, they can be used for any newsletter, including the opening call, live trading Fridays, whatever you like. They come in 3 different purchase options. You spend $500, you get 600 Tiger Dollars, a $100 bonus. You spend $1,000, you get 1,300 Tiger Dollars, a $300 bonus. You spend $1,500. You get 2,100 Tiger Dollars, a $600 bonus, or 40%. Once you apply them to your account, they're used automatically, folks. So even if you're going for Basil's opening call, you're on there at $149 a month. It comes with a 30-day money-back guarantee, and you gain access to that webinar live tonight. And, yeah, you decide to stay on that, your Tiger Dollars just get used automatically. You have nothing to do until that balance reaches zero. So check that out. And as Tim was saying, though, commodities. Now, you got dollar weakness. We didn't even talk about crude today. Look at this move in crude, man. Okay, that's a weekly crude. You're making a run for the bottom part of this channel, man. Yeah, we're going to hit $52. Okay, now next stop right now is the lows of October. No, we're below that level. My goodness, no. Yeah, and you're doing it with some volume today. Okay, crude trading lower, off by 2.8%. That's even with a weaker dollar, as the dollar trades below 98 for the first time since, as I mentioned, October 6th. That's 10 weeks, okay? 10 weeks. We haven't seen a dollar as weak as we saw it this morning. The dollar continuing to challenge the lows. You jump over to gold. And yeah, gold has some volume. 200,000 contracts. You jump over to silver right now. Silver up by 15 pennies, 63.75. All right, folks, thanks so much for tuning in. Have a great night. Have a safe night out there. Enjoy it with your family, your friends, whatever you're doing, folks. Enjoy it. And I'll see you tomorrow morning, 9 a.m. for the morning market kickoff. Thanks so much, folks. Have a great evening. We'll see you tomorrow, folks.